Hello everyone, today is Friday, June 24th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves across financial markets. If you're brand new to this video series, welcome. Thanks for being here. Thanks for tuning in. Here's how these analysis videos work. We break things up into two parts. In part one, we look through the numbers, pick apart everything that stands out, looks interesting, different, or notable. And then in part two, we jump into the charts. We take a closer look at price action, market trends, and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into this week's video. As a reminder, before we do that jump in here, we want to send you to the traderisk.com/waitlist to sign up for the new premium or extended version of this video. We're going to be changing up the format in the coming weeks. So if you want to get early access, maybe a potential discount on the premium pricing, head on over to the traderisk.com/waitlist. Drop your email there. You can leave some feedback if you'd like as well, and we'll be rolling that out in the coming weeks. So let me know if you have any comments there. Let's jump now into some of the headlines from this week. The big story here, of course, is we got a massive snapback rally. This is one of the largest weekly gains across equities indices over the past year and a half, 2 years, and it actually occurred on a four-day work week. So we had the holiday on Monday, so markets were closed, and so we really posted some strong gains this week. We saw many risk assets reclaim their May lows, which I do think is fairly significant. We're going to talk more about that in part two. We're going to also look at what the in-progress monthly charts are showing us right now. We're going to take a deeper look at index breadth, and we're going to take a look at commodities starting to roll over a bit here. Not all commodities, but some of them. We're going to take a sneak peek at that later in this video. And we're going to look at a few individual stocks that are leading the way higher. Most of this is on part two later in this video. So let's jump into the numbers here. If we take a look at the weekly performance, this is the right-hand column here. Just take a look at how strong and fierce these gains were. 6.5% here in the S&P 500. Nasdaq was 7.5%. Russell 2000 was 6%. International stocks a little bit slower, but still up 3%. Take a look at the Nasdaq 100 now, suddenly starting to creep back into positive territory over a 1-month look back. We were just in very deep negative numbers here, and what a difference a week makes. If we take a look at trends haven't changed, right? So this goes to show you just how beaten up this market was. Even the short-term 10 SMA, we still actually have declining. So when we look at the charts later on, I mean, we really took elevator down, elevator back up here for the market. And from a longer, broader perspective, we are still very objectively in downtrends across the board. So we've got some short-term technicals that are improving in the context of these short, intermediate, and long-term downtrends. If we take a look at volatility environment this week, it was positive. So we saw the volatility environment basically come back down, shrink a little bit. We got the S&P VIX around 27.22 going into the weekend. We got NASVOL at 33.72. They both lost about 3 to 4 points. Not actually a huge move. Would have anticipated maybe even a little more of a decline given the 6-7% rally. But volatility, again, expresses itself in both directions, and that magnitude move certainly, still has that elevated VIX number. All right, now if we make our way over to market internals, we can see here that we are still getting a significant outpace of stocks hitting 52-week lows over stocks making 52-week highs. So notice we do have the holiday week in here, so we're looking at, technically, we're taking 5 days worth of data. We're looking at Friday's data in here as well. So if we look, though, just even over the past 4 days, you can see there's basically been a non-existent number of stocks hitting 52-week highs, and you can still see hundreds of stocks making new 52-week lows each day. except for Friday, we start to see a little bit of a dry up. Now, again, these numbers are preliminary, so these are certainly going to change here. I just have to take the rough estimate because of the time I record this video. So we'll see what the final numbers are for Friday. But basically, you know, we've been coming in a very strong hot clip of stocks hitting 52-week lows. So we're starting to see that dry up a little bit here just late in the week, which again just goes to show how damaged this market really was on a longer term basis. We're going to need to see stocks hitting more 52-week highs, though, if we're going to get more confidence in this market rally. Now, if we take a look at sector performance here, mostly green, almost unanimously across the board. At the top of the list, we had consumer discretionary up 8%, healthcare up 7.77%, technology up 7% here. Curious mix, definitely healthcare is some of the stocks we're going to look at later this week, which saw just a very big move to the upside, particularly just for that sector, right? Given the fact it is healthcare making an 8% move, that's a big move. On the downside, energy, the only sector in the red here, down 3%. Take a look at energy's 1 month numbers now, down 17%. So this was the big leader here. This was carrying the weight to the upside. These were the sector of the markets that were making new highs while everything else was flat to down. And now we're certainly seeing the pendulum swing in the other direction, where more risk assets and even some defensive now are starting to catch a bid here, while energy certainly retraces much of its early year gains. Materials in the second spot, industrials in the third spot, both still up 2 and almost 4% respectively. Now, if we look at Treasury yields, this was an encouraging week here for interest rates. They were both cooling off this week. I think that's, again, just a good thing. We've been, really reminding or just harping on this point that seeing interest rates cooling off here, this is one of the ingredients, one of the shoes we were waiting to drop here to actually sustain some type of market rally. We needed interest rates to finally start to cool off a little bit, and they're doing that this week. Again, mostly speaks to certainly the growth stocks. Not all stocks are equal in how they relate and react to rising interest rates. But certainly, again, stabilization and cooling off is a good thing. So both of those happening this week, and really even on the shorter end of the spectrum here is seeing the more significant drop in Treasury yields. If we take a look at the dollar and commodity performance, again, one of the themes from this week is commodities, broadly speaking, rolling over. And we are seeing it this week, even despite a down dollar. We did see gold, silver, oil, agriculture just broadly, and natural gas all in the red here. Natural gas, again, one that was up very large here over the past month or so is suddenly, or 2 months, suddenly now in deep red territory over the past 1 month, down 30%. And then take a look at Bitcoin at the top of the list here. It's been a very long time since Bitcoin's been green here, but 3% weak, trying to show some stabilization around that big 20K level. So that's it for the data dump there. If we take a look at our trading systems here, you can see that Merlin here is our longer term system, about 16% invested. It did hit some profit targets this week, which is what dropped it off. I think it actually got stopped out of one of its agriculture holdings as well. So this has slowed down a little bit, or has decreased a little bit in terms of its exposure. And if we look at our Lamerick short-term trading system here, remember, this was 100% invested coming into this week. I actually got some messages which were kind of funny, just at crazed nature of the trading system being 100% long coming into this week. Obviously, in hindsight, one of its better positioning choices. It did take profits and essentially reduce exposure throughout this week, and it's now sitting very, very heavy in cash, just given that the reflex rally we've seen now in markets, and we're going to just wait to see where it sets up next. So we've got a lot of information about these two trading systems on our websites at thetraderist.com. You can take $1 trials. You can take a look at performance going all the way back 14, 15, 16 years, and you can certainly read up just more about the logic on how they work, see if they can help you out. So that's it for part one. We'll be back here in just a minute with part two. All right, we're back here. We've got TC 2000 open, and we are looking at the S&P 500 cash settled market. This is a daily time frame, and this is our our sort of cleaned up view, our roadmap here. If you've been tuning into the last few videos, this chart setup or chart annotation should look pretty familiar to you. These are the big broad stroke areas that we've been looking at. And like we talked about last week, so last week markets got totally, sort of brutalized here, making new cycle drawdown lows. We talked about the fact that, really there were no sectors left spared last week. We really had some of this washout sort of selling last week where even the defensive areas of the market were really just kind of sold off and left for dead, for lack of a better phrase. And now here we are getting one of the most aggressive rebounds here that we've seen going back, 15, 16 months or so. So when I look here at the S&P 500, one of the key areas that we looked at or referenced from was this 3,800 zone in the S&P 500. We talked about it back here when the S&P 500 made a low and support came in around this zone here in mid to late May. We saw the nice rally up to about 4150 or so. It failed beautifully at prior resistance, at prior March lows, and then certainly, again, broke down and got us those new lows. Now suddenly we are up in very short order here, 7.5%, almost 8% off of the lows. And notice we did reclaim this 3850 zone here in the S&P 500. This to me is bullish for the market in the short term. Now, let's be clear on what bullish means here. We've already moved 8% off of the lows. So you're not necessarily early to this move if you're buying in here. So please just keep that in mind. Time frame is always going to be the dependent here on how you view this analysis, how you view the work that we lay out here. But just from a structural perspective here, the fact that the market got a strong close, a very powerful surge over a squeeze, right? Back over 3850 is bullish in my books. Now, let's see how long we can hold above it, right? If we suddenly just totally reject this early next week and we fail and we start rolling back over here, and then certainly all bets are off. The dominant trend is very much to the downside still. But in the short term, I think you've got to like the action we saw this week. We took out and got back above a pretty significant spot. If we look at the weekly chart here, we, again, closed the gap, took out last week's highs, and really did it on this gap up into a holiday shortened week here. Now, volume was light, but let's keep in mind it was a four-day trading week as well. So when you're looking at volume here, you just have to take that into consideration, is that we were missing a day here. So we almost hit the average volume, I guess about 10% short, but again, down a week. So this to me is, your longer term perspective here, 6.5%. That's a good, good ground covered here. We've essentially retraced about 40 to almost 50% of this latest leg down from the middle of June all the way down to the lows from this past Friday. And so now, this is where things get a little bit more, a little bit more dicey is the fact that we've already reclaimed 50%, rallied 8%, so on and so forth. I do think the momentum is higher. I do think this squeeze can continue into next week. And I do think we could even come back up here and fill this gap and start to challenge these highs again. And I wouldn't be surprised, quite honestly, if we kind of move into the summertime in some type of bigger range here in between, even if it's 3,700 all the way up to 4,200, right? Maybe this is the playground that the market is in for the next couple of months. We can't rule that out. We could just go directionless, high volatility in a volatile sort of range here as the market makes up its mind. So that's, kind of the outlook here. We're still, again, making lower lows, lower highs. We still have downtrends all around, but in the very short term here, I like the move back over this. And if I were, aggressively short, I would be cautious here. All right. I would be laying off of the shorts and just waiting to see how this market settles out here. Definitely seems like we're getting squeezed higher. If we take a look at the Russell 2000, for instance, you can see this has reclaimed its May lows as well. It is back over 170. And this, again, just going into the week here, closing at the highs, coming back in. There's a series of gaps that need to get filled. But generally speaking here, the same comments apply. If we can hold above these May lows here. If we can hold above the opening print here from Friday's session, then I think, you can take some shots at the long side, and we've got some momentum for the bulls to play with. If we look at the Nasdaq 100, we've got more of the same. We've reclaimed the May lows. We are pushing back over into these gaps. We filled the first gap, and we are now basically into and testing this second gap here, which closes around 299 going into the month end. So that's the short-term bullish excitement action there this week. I think it's something to be respected. It's something, again, I do think the bulls have a little bit of momentum behind their sale. Now, let's put this in context, because here's what I know many will be thinking of as well. We've got some bear market rally, we've got a dead cat bounce, so on and so forth. We're overbought. All may be very true, right? I don't want to pick any strong stances here. I'm willing to be flexible and listen to the market, but I do want to point out the monthly charts that we're seeing here. So if we look at a monthly chart, we're going to start with the S&P 500. I mean, this monthly chart, and let's actually clean it up even more if we can. Okay, so here we go. If we look at this monthly chart on the S&P 500, notice, we did undercut, right? This is just illustrating the closer price action, but I think monthly charts just illustrated a little bit better. We undercut the May lows here, and basically price has been sort of rejected below this area here. So we got this nice tail on the S&P 500 last month, and buyers essentially drove us higher. And then this month we kind of came back down, broke below it. We probed below this area, and then again we got rejected. Let's take a look at the Nasdaq 100. This illustrates it even nicer. So again, you get this big tail from last month. We probed below it again this month, and again we have popped back above it. So one of the things I'll be looking at this week will be month end. This will be the end of the monthly candle this coming week here. So how does the monthly candle shape up? How does the buyers react to these bigger, significant, more key kind of price action areas? That's what I'll be paying attention to. A nice strong close, or a close towards the highs of, the monthly candle, would certainly be very, very bullish. And the Russell 2000, again, you can see trying to get back over that monthly last month's lows as well. Let's take it one step further here. Let's take a look at index internals here. So this is a screen here that I've built out recently here, and we're looking at these top three grids. I'm actually going to shrink this down, and we don't actually care about this chart on the right at the moment. And so what we're looking at here is the Nasdaq in the bottom. We got the Russell in the middle, and then we've got the S&P in the top. And what this is showing us here is the white line is the percentage of stocks. Actually, this is I'm sorry, it's not the percentage, it's the actual number. It's the number of stocks here that are above a 200 period simple moving average. Okay, so how many stocks in the S&P 500 are above a 200 SMA? How many stocks above how many stocks are there in the Nasdaq 100 above a 200 SMA? That's what we're looking at here. And so first off, if we just zoom out here, let's take a look at 2020. This was COVID, and let's just keep it simple. Let's just go to the Nasdaq 100. I don't want to add too much complexity here or confusion. So if we look here at the Nasdaq 100, number of stocks above a 200 SMA, and we take a look at where we were back in COVID crash, we got down to about 13 stocks that managed to stay above a 200 SMA. Take a look at 2018. Remember the fourth quarter, we got that kind of sell-off crisis. We got the Fed that was starting to raise rates, and we had that liquidity kind of dry up here in late 2018. We had about 9 stocks above a 200 SMA here in Nasdaq 100. And now look where we currently are. We've got 18 stocks in the Nasdaq 100 that is above a 200 period simple moving average, but we washed out to 7 stocks above a 200 period simple moving average last week when we saw the brunt of the selling, or the extreme point of the selling. And what this is just, again, here to illustrate is how extreme we are of a longer term, a broader sense of oversold in the market. So I think the common reaction to this week's rally is that's, a bear market bounce, and here we are, we're already overbought. That might end up being the case, right? There's a probability that that is the case, but I think what this is showing you is that from a longer term perspective here, I mean, we could easily move back up into the 40 or 50% to reset. And, you know, we would still be in like a broader kind of structural downtrend, and then we could roll over from there. So what that could mean and translate into the Qs here is maybe this bounce again gets back up to the 315 area and it starts to develop a range, or even up to the 330 area here over the next month or two. Again, not saying that has to be the case, keeping an open mind, letting the data and the context of where we are in this cycle really dictate my analysis here. So that's some food for thought, taking a look at the monthly charts that we just looked at, and then taking a look at things like the under the hood market internal breadth here on the 200 SMA. And again, you can look at any of these other charts here. So the Russell 2000 technically didn't get quite as oversold as it did in 2020. And if we look at the S&P 500, same similar thing. We got a little bit higher than relativeness to the 2020 area. So hopefully that's interesting to you. I thought that was interesting when I was starting to take a look at it. And now let's start to look at a couple of other charts here. So let's go to commodities, because commodities is one of the things we wanted to talk about here. We've got oil, which was down 2.5% on the week. It was essentially adding to the losses from last week. And if we take a look at the USO structure here, again, you can see some of this rollover starting to happen. We broke the uptrend that we were most immediately in throughout May and early June, and we did lose this this high point here in, I'm sorry, that's the wrong one. Oh, let's clean this up. We did lose this high pivot point here from the March highs in oil. So we are suddenly now kind of double topping, breaking down, and coming back into this consolidation area here for oil. Still waiting for that higher low to develop. Looks like a pretty messy area, just not an interesting picture for me to look at for a trade. If we take a look at Treasury bonds, again, we talked about yields cooling off. We talked about the 10-year bond here. You can see continuing to rally up. Now, all of these rallies in the past have just been bear flags that have resolved lower. So again, when we're looking at clues to maybe how equities are going to perform from here, we can keep an eye on the bond market and see if this just becomes another bear flag, or if in fact we can start to move up and actually start to put in a more meaningful bottom. I would highlight the increase in volume here over the past several weeks over the buying over this rally seems a little bit different than, say, right in here where we had lighter volume on this uptrend. We're starting to get heavier volume on this move up. So that is a slight change in character as well. Some more kind of bullish, underlying marginally bullish things. We can look at TLT as well. Note the volume, note the move off of the lows. And again, let's just keep an eye on it. Trends are still objectively lower. Let's next move to ARK. We talked about ARK last week. So remember ARK last week, we said, the glass half full analysis here, growth stocks didn't quite take out the May lows, right? So, in equities or the equity indices, we all took out the May lows. And so for ARK, we actually put in, and I'm using ARK as just sort of the poster child for growth and high growth stocks. You could see we put in a slightly higher low, and we've seen 5 very impressive days of buying pressure here. You can see actually volume has been pretty solid, and this looks kind of a different change of character as we come back up to test the May highs at this point. So ARK is sort of leading us here in some respect in terms of maybe just what we can expect here for this market. Again, look at this in context, zoom out and just see how far we have come from the highs here. We had about a 78% correction in this ETF here. And, I know we are short term getting back up to resistance, and we've seen a 20% rally, but we're still in the very big context, quite significantly, delevered to this sector of the market. So again, all some context there to just frame out this more broad market. If we go now to some of our industries and sectors that have been performing well this week, if we look at industry analysis here on the upside, it's a pretty short list. We got auto, trucks, and dealerships coming back strong this week, heavy volume coming in. We've got a defensive area here, so this is household and personal products. Take a look at the volume that comes in here as it thrusts off of those lows. We've got shipping and logistics, scientific and technical instruments, seeing some heavy volume and a nice move off of this downtrend here, trying to put an end to it. Tools and accessories, not sure what's going on there. Heavy volume, but this index looks a little bit skewed. And independent power producers getting a nice rebound here from the lower end of its range. On the downside, we only had one, and it was oil and gas refining and marketing. We talked about the oil and gas energy unwinding there, and that seems to be the case. Now, let's look at a couple of other individual stocks. I said there were a couple of stocks that we're going to look at this video here on just leadership. They all come from healthcare. So again, if we look at healthcare, XLV, take a look at this week here. Again, volume is light on the traditional perspective here. Again, it was a 4-day holiday week, but still a very significant move here for XLV, 7.77%. This is a very big week for this type of index. If you take a look at this broader range here, you can see that it did reclaim this sort of year-long sort of sideways basing here around 125. So I do like that. And some of the leading names in this area, I know it's healthcare, I know it's a little boring for some, but Eli Lilly, take a look at this weekly pattern here. So weekly chart, this is weekly new all-time highs for a very big company here. So this is breaking out to new highs, helping lead the index. We got Bristol Myers here. Take a look at this nice weekly pattern here. Again, maybe not the most well-liked stocks, but again, from a pure TA perspective here, you've got this beautiful high and tight sideways range for about 6 months, and now you're just ripping through it, going to new all-time weekly closing highs. And last but not least, let's look at VRTX. Again, nice all-time highs. Not all-time highs, 52-week highs. Almost all-time highs. Let's see, is it all-time highs? No, it's close, but it's not quite there. But you can still see, again, this nice kind of surge up here, closing at highs. And again, all really concentrated in biotech healthcare sort of sector. Lots of leaders in that name this week. And that's what I wanted to leave you with, just some individual ideas from that perspective. So that's all I've got for this week. Don't forget, if you do like these videos, you want to stay up to date with the extended premium version, the most sort of in-depth analysis, drop your email, thetraderist.com/waitlist on our website. And as always, let me know what you're thinking about, what you're looking at this weekend in the comments section below. Do you believe in this market rally? I'd love to know, is this just a bear flag here and just a sort of, fizzle out rally that's going to take us to new lows in the next few weeks? Or do you think this is a more significant low being put in here by the market? Let me know your thoughts in the comments below. And as always, I want to thank you again for tuning in every Friday, long form market analysis just like this. You can subscribe to our YouTube channel or always watch at thetraderist.com. Have yourself a great weekend. We'll see you back here next week.